Well, my first question, Honourable Minister, is about the projections for oil production in the medium-term expenditure framework, given the role of oil production or oil revenue shortfall in this fiscal restraint. So I'd like a view on the basis of these projections, if I may.
Well, I wouldn't say that the fiscal prudence is on the basis of the shortfalls. No, I disagree. From 2011, we've had a policy of fiscal consolidation with growth, which is an interesting concept, where I think that you can both tighten, but at the same time channel the available expenditures into those key economic sectors that create a bottleneck on the economy, like infrastructure, and you can still get fast growth, even though you're tightening. We've been pursuing this policy now. You know, we're almost moving into the third year of it. You know, so we've had to adjust a little bit more to be quite prudent in budget 2014. So we've projected about a 9% fall in expenditures to accommodate the fact that we think we need to tighten a bit based on what we have experienced in terms of as you say, shortfalls in our revenue profile, both from oil but also some non-oil. And the non-oil shortfalls are due to the fact that our fiscal policies vis-a-vis, you know, deciding to, you know, produce, to encourage the growing of our own food, substituting cassava for wheat, for instance, growing our own rice. And this has resulted in putting in higher tariffs to protect these sectors, which has again led to a drop-off in imports and therefore in customs revenues. So all of these have come together to make us craft a budget that continues this theme, but perhaps is much tighter than the one we had last year.
My second question is on non-oil revenue, which you just alluded to. I'm wondering whether yourself or the Ministry, you've considered contracting out some elements of revenue administration to a creditable, independent body?
Well, that's a very interesting concept. I mean, in some countries, they have independent revenue authorities. You know, a country like Rwanda, for instance. But they're still government bodies. They've not exactly contracted them out. We have the Federal Inland Revenue Service that is quite semi-autonomous. But what we've decided to do, they've been doing quite a good job in recent years, but we've decided we can even enhance that. So we employed, I talked to my colleagues, you know, you have to learn from what has worked elsewhere. So I talked to the Minister of Finance in South Africa, I talked to the Angolans and talked to some other countries. And, you know, to learn from their experience. And what we decided after talking was to get a reputable firm like McKinsey to really look at where we can plug leakages more, where we can enhance, you know, our profile, and they've done that. And we are now embarking on a drive to really plug the leakages in the economy and enhance our tax administration and thereby further enhance non-oil revenues.
On the expenditure side, I mean, obviously a large element is the fuel subsidy, and before January 12, I think I'm right in saying that the cost is 2 trillion plus, and now we're 1 trillion. So halving of the cost of the budget. But I'm wondering whether we might expect another move on deregulation from 2015.
Actually, we are slightly below, you know, half. We should, you know, we paid out 2.2 trillion. So technically, with this subsidy withdrawn, we should be at about 1.1. However, we are below that. Last year, for instance, we paid 950 billion. This is to oil marketers. Yeah, this does not include the NNPC portion. Yeah, so we are even slightly below. So that means we've also, you know, gained in efficiencies, you know, and plugged maybe the holes that were in the system, you know, because that's at least a gain of 150 billion naira, that we almost $1 billion in plugging holes and rejigging and reconfiguring the system. You know, so we've managed to do that, and I think what we now need to do on the subsidies is convince Nigerians that the money we have gained from reducing the subsidies is being usefully employed to improve their lives. And there's a, trust between government and the people is quite weak. So we need to work really hard to convince people, Nigerians, that money is being well used, and that will take some time. The first year of the subsidy program, of the subsidy reinvestment program, that's what we call it, SHOPI, was slow because we needed to put systems in place for it to work and to identify carefully the projects. But now the pace has picked up, and I think that Nigerians will begin to see on maternal mortality and infant mortality and nutrition. We built a safety net program with conditional cash transfers that is working very well. And we piloted that in 8 states, and we're going to scale it up. We've also put money into infrastructure to complete the overhauling of the train system and roads and so on, and that is also working. So we need a bit of time. Let us prove that government is using the money they withdrew from subsidy well, then before we think of the road ahead.
Yeah, you've been highlighting on the McKinsey, your work with McKinsey, and we know that the ministry has located ghost workers, ghost pensions, and therefore saved a considerable expenditure. I'm wondering if there are any other initiatives you could share with us to reduce, to trim recurrent expenditure?
Yes, I have to be very upfront on the recurrent side that we've had a reversal. So when you see the new budget, you're going to see that recurrent spending has, in fact, as a proportion of overall expenditures, has gone up. Previously, we were on a downward trajectory. After the review of the report, it turned out that many of these agencies have laws underpinning them, and that until these laws are repealed, we cannot do away with those agencies, meaning we have to go back to the National Assembly to see how we work with them to get those laws repealed. And you know what that means. You know, when you're working on those things, there'll be people lobbying the legislators, of course, and so on. So we've become a little less hopeful of impact there. So we're looking at things, as you said, like what can we do with biometrics? What can we do with digitization of payments? Because those are the things using technology that could make some savings for us. So we have, we've gone more than halfway with putting in an integrated personnel and payroll management system for our staff, which uses biometrics, and that's where we've weeded out ghost workers. I think last time I reported we had saved about 100 billion naira. Now we're at 120. So we've added another 20 or so. So as we go along, you know, and we weed out and we get people on a proper payroll, we are making savings. So that's one possible place. But one thing we need to know, why the recurrent is also so sticky, is that in 2010, a very high salary or pay rise was agreed for all public servants, unprecedented, at 53% in 2010. So it was a huge bump. I think the salary or wage bill went from like 800 billion to 1.7 trillion or something like that, virtually overnight. And commensurate with that is the need to pay pensioners. You know, because the law says that if you make salary increases, you have to increase the pay, although it doesn't say by how much. So we've had to integrate military pensioners. They had not been put in these past almost 3 to 4 years, and now we have to integrate civilians. And again, that's going to make the recurrent bill go up. So some decisions made in the past are making it quite difficult now to cut recurrent costs the way that we had anticipated. And I'm going to be very upfront about that.